Hi, I'm Paul Edelman, Chief Investment Strategist for Russell Investments, and this is the Market Week in Review for the week ending May 30th, 2025. I'd say three themes stood out to me this week. First, from a markets perspective, a broad risk-on tone on the week. Second, in terms of the economic data, we're starting to see some signs of life in the surveys, which had been quite weak, but now a little bit of a rebound in consumer confidence, but also business capex intentions, which is encouraging to see. And the third and finally, we're towards the end now of the first quarter earnings season, and on balance, that's been pretty strong. And I think those fundamentals are part of why markets have been resilient and positive here in the period. But starting with the market results, and this has been a holiday shortened week here in the United States with the Memorial Day holiday. But even with that, the S&P 500 index is up 1.9% on the week through Thursday's close here in Seattle. That's obviously a good return and has modestly outperformed positive results globally, with MSCI All Country World Index also up a little over 1%. If you zoom out even a little bit further than that, the market rally off of the lows in early April has just been really phenomenal. For the month of May as a whole, we're tracking over a 6% return on US equities, which is just really outstanding. Moving away from equities in sort of the fixed income market space, credit spreads have traded tighter here over the past several weeks and are now towards the tightest that we've seen in this post-Liberation Day period. And then around sort of the government bond market, where there had been some jitteriness towards higher yields in recent weeks. Some of that pressure has come out of the market, and we've actually seen the 10-year Treasury yield in the U.S. decline by 8 basis points so far this week. So, in short, with credit spreads tight, bond yields declining, and equity markets higher, most sort of the broad asset classes have been strong here in the period. Second, just around some of the soft survey data here, again, we're seeing some signs of life. This had been sort of an area of weakness in the data recently, but two, I think, positive tones this week. First, around the consumer, the Conference Board measure of consumer confidence did rebound pretty noticeably this week for the month of May, um, which is encouraging. We've seen some resilience in actual consumer spending, but this pessimism, and it seems like at the margin, confidence is gravitating back up towards what has been a stronger reality. And then around the corporate sector, we've gotten a number of the regional Fed manufacturing surveys, actually all five of them now for the month of May. And one of the things that really stands out there is a notable rebound in manufacturing companies' capex intentions for the next 6 months, where those intentions are now back all the way where they were at the start of 2025. So a nice bounce back from previously weak levels when businesses were much more concerned about tariff risk onto their investment plans. And then third and finally, the earnings season. We're wrapping up now with the last of the big tech companies having reported this week. So on balance, the results there have been very strong in the US. We're tracking around 15% earnings growth in the first quarter on a year ago basis. And that's almost a doubling of where consensus expectations were coming into this reporting period, with the consensus looking for closer to 8% growth. So a really nice positive surprise. And under the hood of that, while there was certainly broad-based strength, some of the technology companies in particular have been a source of fundamental resilience and strength here in the recent period, and they're obviously a big weighting in the U.S. market, which has helped to support this rally here recently. So I think those are the key takeaways this week. Thanks for tuning in. We hope to see you again soon. Bye.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.